Good morning. It's Saturday, April 17th, 2021. Talking gold and silver charts this morning. I want to start with the weekly chart of gold. And I want to point out that the longer the tail on a candlestick, so whether it's a bottoming tail like this one, or a topping tail like this one, or this one, the more significant it is. So obviously, we can see in hindsight that after this huge run up of all these weeks, these green weeks in a row, we reached the first week of August, and the gold weekly candlestick had this very large uh, tail to it, wick, you could call it. And then we printed a big red candlestick the following week, and that was the start of a pretty long downtrend, right? Since early August. Recently, gold has had three weekly candlesticks. So this one, and this one, which all had bottoming tails that stretched under 1700, but price did not make a weekly close under 1700. I think that's very significant, especially when you look to the left on the chart and you see how significant the 1700 level has been in the last year and a half. Okay, this was clearly a resistance level in March 2020, February, March 2020. And then it became support between 1670 and 1700 last June. And now clearly we have support again just under 1700. The low from a few weeks ago was 1677.30. The low from March was 1673.30. So that's close enough that we can call it a double bottom. And you can take another look, take a look at this daily chart. That's a pretty damn clear double bottom. That's a Captain Obvious double bottom. But we want to also point out that this double bottom, occurred, amid significant momentum divergences. So this is a bullish divergence where price came to retest this level in the 1670s, and the relative strength index and the CCI made significantly higher lows. This double bottom, so the second test of this area in the 1670s, also occurred on much lighter trading volume. So that is characteristic of a market that's just sold out. It's just like no sellers are left. It simply had been falling on very weak buying sentiment. And if we take a look at this chart of gold, gold, newsletter writer sentiment. Wow, this red line here. Wow, I mean, March, April 2021 is the worst sentiment according to this index in years. And if you've been around for a while, you probably do remember August of 2018, or maybe you remember April, May of 2019. You certainly recall last March, right? All three of those periods of time that I mentioned in the last few years were very negative sentiment readings. And they also all turned out to be tremendous buying opportunities for gold and gold mining shares. The sentiment recently in the past month or so is actually worse than all three of those times that I stated. Worse than August 2018, worse than May 2019, worse than March 2020. That's unbelievable. That's extremely notable. So if we overlay the sentiment onto the charts, the technical chart structure, and we see this very clear, strong bottom, it's a pretty good sign. It's pretty bullish. So that's the bullish case for gold and gold miners here. Again, I could show you the weekly chart of the gold bugs index. We came back to a very clear area of support around 250 in March, and we've rallied about 20% off of that level, right? But we're coming up on an area of key resistance around 300 on the Huey, on the Gold Bugs Index. So a bottom is probably in place, but that doesn't mean that it's straight up from here. And so that's kind of the point I want to make in this video. There's some really good signs here, but I'd expect, and I drew this red sort of target box, that gold might come up to retest this zone just above 1800 in the next few weeks, probably by the first week of May. And then we'll get a pullback. And probably the pullback will bring us back down to somewhere in the 1750 to 1760 area, would be my guess, perhaps even lower. But I would say my, minimum downside objective would be a $50 pullback per ounce once we get into this red box in the next few weeks. Let's see what else I want to look at here today. Yeah, and so a point I want to make on the monthly chart, and I've made this point multiple times in the last few months. On the monthly chart, the last 7 months looks like nothing more than a pullback within the context of a bull market uptrend. It hasn't felt great. Obviously, it's generated a significant wall of worry and extremely negative sentiment, but that's usually a buying opportunity, especially within the context of a chart that's going from the bottom left to the upper right. So bigger picture, gold bull market still extremely intact. Shorter term, double bottom in place in the 1670s in gold. On the gold bugs chart, 250 is clearly big support. We've bounced off that, but probably going to run into a little bit of pressure just above 300 on the Huey. And then gold shorter term could probably get above 1800 in the next few weeks. And then we probably are due for another pullback. One more chart I'll take a look at is silver. And you can see that silver has been in a consolidation since last August between about 22.50 and 30 on the upside, currently 26.10, so right in the middle of that range. But this is holding a major long-term breakout from a 6 to 7 year bottoming process, essentially a big oscillation that extended all the way down to 12 or even into the 11s at the very, very bottom last March, which was just a capitulation, bear market bottom to 20 on the upside, broke out of that last year, tested 30 a few times in the last several months. Clearly 30 is a big level of resistance, and we've been in a consolidation ever since. But this is quite bullish, bigger picture, when you consider that silver was in a 8.5 year bear market since May 2011, made a bear market bottom, a very climactic bear market bottom just last March. So that was just over a year ago. So think about that. Almost 9 year bear market with a major climax bottom just 13 months ago, with a major long-term technical breakout that's holding above a rising 50-week moving average. So bigger picture, silver looks very good here on the weekly time frame, but obviously it's been messy, it's been volatile, and it may continue to do that. But bigger picture, I would bet on a breakout above $30 in the next 6 to 12 months. Obviously, trying to get the timing of that exactly right, basically impossible. But as long as we're holding up here, in this sort of flag formation, uh, it's building a lot of energy. And the more energy it builds, the more powerful that eventual breakout will be, in my estimation. And I guess just one final point. So gold has been a real interest rates trade all year. And we started with the 10-year real yield at negative 1.08%. It became much less negative throughout March, getting all the way to negative 0.57%. So even though it's a negative interest rate, um, it was much less negative. And obviously, when the negative real yields are even worse than negative 1%, that's extremely bullish for gold. But as they get closer to the flat line, it's not as bullish. But you can see in recent days, we become more negative again. And on the 30-year, we're basically back to zero after going positive, in March. So gold is clearly very sensitive to real interest rate yields on treasury bonds, and that is the short term driver of price. Have a great weekend.